421. The adjusted trial balance of Stone Sign Company follows, and we're supposed to do the closing entries and then say how much net income was and how do we know. Okay, so now remember when you do closing entries, you only close temporary accounts, all right? So your assets, your liabilities, and your equity account, sorry, this should go there. These are permanent and you don't close them. All right, so you're not going to use from common stock up. You're not going to do anything with this stuff. You're going to close out dividends through revenue. Okay, I'm going to do the entry over here. So generally the first entry is close revenue. When you take the test, you don't need to write what you're doing. You just can do the journal entry. All right, so revenue has a credit balance. So when you close it, you have to debit the revenue account and you're going to credit income summary. The second entry is typically to close expenses. All right, your expenses have a debit balance, so to close them, you have to credit. And you're going to transfer their balance into income summary. So I'm going to debit income summary. And I'm going to credit these expenses. And yes, you have to list them all. So I'm going to have salary expense, rent, depreciation, supplies, and utilities. All right, so salaries was 37, rent was 14, depreciation is 4, supplies is 3, and utilities is 6. I got a little offline there. So add these up. All right, so then my total is debited to income summary. All right, now my third entry is to close income summary. All right, so usually what I do is a little T account for income summary. So here's my income summary account. Income summary was credited for $17,300 for the revenue. It was debited $6,400 for the expenses. When I balance it out, it has a balance of $10,900. All right, so this is revenue minus expenses. So this would be equal to your net income. All right, and they had net income because the revenue was greater than the expenses. If it ends up over here on the debit side, then you would have a net loss. All right, net income increases retained earnings. This income summary right now has a credit balance. So to close it out, I have to debit income summary for the 10.9. And I'm going to credit retained earnings, which makes sense because net income increases retained earnings. So I should credit retained earnings to put net income into it. If I happen to have a net loss, it would be the flip. All right, I would reverse that entry. All right, and the fourth thing is I need to close out these dividends. All right, so I'm going to close dividends, and they get closed directly to retained earnings. Dividends are subtracted out of retained earnings, so they reduce retained earnings. So I'm going to debit retained earnings. Dividends also has a debit balance, which means I have to credit them to close it out. And those are my closing entries.